there, everybody. Today I'm coming to you with the Venice, Florida housing market update for September of 2025. And you may have heard that Venice is back to a seller's market. I've seen a couple of these things online. I've seen a couple of them on YouTube. And all I'm going to say is looking at the actual numbers tells a different story. So today I'm going to give you the real numbers, listings, sales, median prices, and the facts on how certain numbers skew the data. I'm Robin Vaccai, the broker owner of Beach Bay Real Estate and a certified financial planner for 25 years. You're watching Suncoast South, where I share the real story of the Venice housing market, neighborhoods, communities, the cost of living, what goes on with HOAs and CDD fees, and what it's really like to live here. Now, let's get into some current market data. So currently, for single family homes in Venice, Florida, the 2025 number is we've had our year-to-date average of about 892 homes on the market. Now, to put that in perspective, historically, the 10-year average is 450 homes. So we're nearly double, okay? Inventory supply today at 892 is nearly double the historic average. Closed sales. This number is staying pretty static to what the historic long-term average is. So current year-to-date monthly sales have been about 146 sales per month. The historic 10-year average is 143 sales per month. So that's pretty even, or flat as I like to call it. But here's the other piece that nobody talks about, and I'm going to share with you: the quitters. And what do I mean by the quitters? The quitters are the people who had their house on the market for whatever reason, and they took it off the market. So in the past 12 months, there were 907 single family homes that were removed from the market. These were either canceled, withdrawn conditional, or expired. They got to the end of their listing term and the listing just went off the market, no takers. What's really telling, though, is out of 907, 522 canceled, meaning the home seller went to their agent and said, you know, we're going to take the house off the market. And that's because why? Nobody's looking. So we had a big chunk of homes. That number, canceled, withdrawn, and expired, exceeds the current average active inventory of 892. So that's really telling. So 892, the current active listings. As I just said, this year, 907 properties came off the market. So that's a bigger number. Sales are averaging 146 a month. And if we use those two figures to come up with how many months of inventory, if no new listings come on the market, that's what that means. If we start with today's number and how many have sold per month, it would take 6.1 months to sell everything we have in inventory now based on the monthly sales. Okay, now let's play a little game with what happens if half of the quitters return. So I said 907 listings came off the market. Let's just say 454 of them, only half, decide, okay, we do want to try to sell, and they come back on the market in our season, which anybody who lives here knows that our season pretty much begins from the late fall into the spring. High season is January through March, and you'll see a lot of listings will come on the market during that window. So scenario one, let's assume sales stay flat at the 146 a month, and we end up with the existing 892 listings. I'm just playing a hypothetical, and half of the quitters, they come back on. That brings us back up to 1346 listings. If sales stay the same at 146 a month, that puts us at 9.2 months of inventory. Now, let's assume that same scenario of half of the quitter sellers come back on the market, but sales tick up a bit, as they often do during seasons. So let's say they go up to the historic average of 180 a month instead of 146. We end up with 7.5 months of inventory. And that's assuming our base started at the same number and we only added in those quitters. We didn't add on the normal amount of listings that do come on the market during our busier season, which is the winter months. So this is still not a clear picture of what, could happen. So that puts us at 7.5 months of inventory if sales pick up a bit. So now In Venice, I just want to put this in perspective. In 2019, the median sale price of a single family home in Venice was $258,250. Okay. In 2025, that number had come down from its peak, but it was at $350,000. So basically $100,000 more in a 5-year period. It hit the peak in 2022, which the median sale price was $372,330. So prices have come down, but they're not back down all the way. So what the numbers tell us is from 2019 to 2022, prices jumped nearly 44% in just 3 years. And since 2022, they've slipped about 6% total. And it depends again on which numbers you look at. Month to month, it'll change slightly. But on average, people are reporting 6 to 12% decline so far. So prices are still up using the 6% number, 35% from 2019 levels. And figures change from neighborhood to neighborhood. So even though a lot of data that you hear reported, National Association of Realtors, Realtor.com, Redfin, they report, national numbers, real estate values are up. In the local market here, sale prices are trending lower. And we do have all that, what I call the ghost inventory. So, and when I add in condo and townhome data, which I will do in another video, the price decline is greater because condos have been somewhat stagnant, and that's for other reasons. So we talk about, median prices, but median prices can be a little bit misleading. You got to remember, we're basically just taking a string of numbers. This is how they arrive at the median. We say, we had a sale at this number, this number, this number, this number, all the way up to here, which could be $2 million. And then we take the midpoint of those numbers. So it's not exactly accurate. Usually the median and average numbers fall, they're pretty close to each other, but most of the time they're reporting a median. So it can be skewed. I always tell people, let's look at the real neighborhood data before we come up with anything. So anyway, builder incentives skew the market. And this is a big thing for me, just like the ghost numbers of the quitters. New construction, when they sell a property, they record it at the full sales price. So the game they play is they sell a house, and I'll use this $500,000 example because it's going to be that in my little scenario here. But a $500,000 sale, but they're giving the home buyer various incentives, which currently they're offering things like financing incentives, mortgage rate buy downs, closing cost incentives. Okay, you don't want to pay the closing costs, which, whatever they are, $12,000, $15,000, $20,000, depending on the property. They're going to pay those too. So all told, the estimates are builders are paying about $30,000 out of pocket for all these incentives. So they tell you, okay, you buying a house for $500,000 and we're going to give you $30,000 for all these other things. So technically the builder's net is $470,000, but they're recording the sale at $500,000. So if you're getting a mortgage, you're paying your mortgage recording tax on the amount of your loan, but your property tax base starts at what the sale price is. So even though the property assessor will say, it's somewhere between 85 to 89% of the sale price is where they start their base amount, you've now added on that extra 30 that the builder gave you in credits. So I say it really does inflate the reported sales numbers by new construction, but I'm also known to say, what do I know? When I tell that to people, they look at me like, what? Okay, so the wrap up is is Venice back to a seller's market? People have reported this on YouTube. I've read it in a couple of headlines. And based on what I just told you, no, I don't believe that to be the case. I believe a lot of home sellers quit the market. I see what builders are still doing and offering with incentives. So I think there'll be some more inventory coming back on the market as we move into the winter months, which is typical for Florida. Inventory is nearly double what it is historically. Sales are basically flat. They're not any higher or any lower than they have been over the last 10 years. And as I just said to you, almost 1,000 sellers in the Venice market gave up trying to sell. Builders will continue to make significant deals to lure in buyers with financing and closing cost incentives. because those things are what, impact affordability. So if people can't afford the home at the price level it's at, and the mortgage rate is too high, even though they've come down a bit, builders are still offering incentives. So that's the real story, not just the headlines. And again, I'm Robin Vaccai, the broker owner of Beach Bay Real Estate here in Venice, Florida. If you found this information helpful, or even if you didn't find it helpful, let me know what you think in the comments. Please subscribe to the channel for ongoing updates. Visit Suncoast South for more charts and resources, because I'm going to post the charts on the website so you can see those. Thanks for watching, and I'll see you again next time. Bye for now.